Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita Khemka, and a very happy Yatin Mota alongside me.
Hello there.
Well, of course, there's reason to be happy, Yatin.
True.
It's a magical Monday, so to say, because we did manage to turn positive for 2025. And looking at the market action, so to say, it's a sixth straight day of gains. Last week was spectacular, and
Clearly.
we have just been extending that string of gains this week as well. And not just that, we had reclaimed 23,700 intraday, Yatin. 23,708, that was the swing high. Now that perhaps would be the next level to watch out for, whether we can really defend that or go past that as well or not. But yes, a 1,300 point rally coming in on the Nifty over the last 6 sessions. Mid and small caps have also fared pretty well. Last week, remember, the weekly gain for the mid and small cap indices were the best weekly gains since 2020. So yes, that's the kind of momentum after the kind of drubbing that we had seen in the market, Yatin.
Yes.
And one point that you pointed out earlier in the day, the fact that BSE has added, BSE listed companies have added 35 lakh crore rupees in market cap in the month of March.
And not
so
only
far.
that, the rupee versus the dollar and the Sensex Nifty have turned almost flat to positive for the year 2025. So the last 3 months of pain
Damage.
has seen a stupendous rally. In fact, I was looking at data. The mid cap index is up 10%, and the small cap index is near about up 14.5%.
That's true. But they're still yet to turn positive for the
Yes,
year, like
yes.
how the benchmark indices have managed to do on a intraday basis. But the breadth of the market has been improving quite significantly as well, Yatin. Today as well, 2:1, that was the NSE advanced decline ratio. All of the sectors were participating in today's gain. Even the IT pack that was bearing the brunt of slowdown fears in the US today managed to gain somewhere around 1.5% or thereabouts. That was one of the top sectoral movers today. Banks, Yatin, passed that 51,000 mark.
True.
In fact, just about 5% away from 52-week high as well. But gas stocks were pretty active today. They were on fire, if I may say so, on the back of a regulatory boost expected from PNGRB. So yes, that was another pocket that was in action today. In terms of Nifty gainers, Kotak Bank, they have appointed a chief technology officer.
Yes.
That came as a big boost. The stock was almost up 5% or so. You had NTPC, Tech Mahindra, even PSU banking behemoth, SBI was among the gainers. Axis Bank, Bajaj Finserv, Eicher Motors, HCL Tech, I think, saw an upgrade from CLSA as well. So that stock was up and about. Reliance Industries as well, above the 1,300 rupee mark. In fact, up somewhere around 2%. Safely can be called among the top contributors to today's gains as well. But aside of that, what didn't do well was Titan, Yatin. Of course, we'll be talking about it in details. There are some growth concerns there, and the stock itself, if you look at the stock performance on a YTD basis, hasn't really been able to edge back into the green, so to say. Continues to be under pressure. IndusInd Bank, Trent, again, it was a down day for that one. M&M, Yatin, you reported some news, exclusive news on that front, looking to buy a promoter stake
In SML
Isuzu. Yes, on the back of that, that stock was under pressure today. But SML Isuzu was up and about, I think 5-6% or so. Some FMCG names were out of favor, the likes of Britannia, Nestle, etc. But what about the broader end of the markets? Quite a few stocks like JBM Auto were quite active today.
Quite active in trade today, and if you look at the mid cap index today, that was up nearly 1.5%. Similar gains were made by the small cap 100. And look at the market breadth, improving and how almost 3:2 where the advanced decline ratio stood at. So good move coming in for a few of these mid to large cap stocks. In the top gainers for Nifty 500, we have the likes of JBM Auto. That stock zoomed nearly 18% intraday. Finolex cables, 12% higher. Alkyl Amines, Ireda, a whole host of these FNO stocks, and in the list is quite long. Hindustan Aeronautics up 6%, Policy Bazaar up 5%, Titagar Wagons up 5%. So the stocks, especially on the PSU defense front, which have corrected, have seen a good amount of bounce back coming in. As far as losers are concerned, we had stocks like Idea Cellular, and there have been reports that they will probably surrender some of the spectrum because they are not able to pay a few of the dues. So that stock was under pressure, 4% down for that stock. PPL Pharma was down 4%. KC International, after some bribery charges against some company officials came in the news reports, that stock was down nearly 4.5%.
All right, quite a few losers as well, but I think the list of gainers was far bigger than the list of losers in the mid-cap universe as well. But let's talk about some of the stocks that are on our radar. Let's break it down to a few of them. First of all, Titan, the top Nifty laggard today. Of course, there have been concerns regarding the company's revenue growth. That is expected to slow down. Some brokerages have also come out with notes on that, and they've also flagged off the fact that valuations are pretty rich at this juncture. And these are some of the concerns that led to an almost a 2 to 3% cut on the stock of Titan in today's session. In fact, even if you look at the YTD chart, you will see that stock has really been under pressure. But let's take note of the Ambit report on Titan, where they have mentioned that the growth momentum that the company had seen in the past quarters may moderate in the fourth quarter of the current fiscal. Although the company had indicated a strong start to the fourth quarter in its con call in the third quarter, but they flagged a pause after first 3 weeks due to a surge in gold prices. Of course, we all know that gold prices have surged, and how both in domestic as well as international markets on the back of geopolitical concerns and what's happening with the tariff issue. So yes, gold prices have been on a tear, and because of that, of course, demand has taken a hit in terms of buying, right? It has become expensive. So and aside of that, Ambit has also mentioned that channel checks have suggested weaker revenue growth trend for Tanishq in the month of February and March, and that would of course reflect in the numbers for the fourth quarter as well. Now, this has raised concerns over the company's ability to meet the fourth quarter growth expectations, which stood at 22% according to Ambit, and the consensus estimates stood at 29%. But of course, if the actual growth is in the range of 15 to 18%, analysts are expecting a 2 to 3% cut in FY26 and FY27 earnings estimates. Of course, that will come as a big dampener for the stock as well. The brokerage Ambit has also pointed out, that there could be near-term revenue pressures and uncertainty around the margin recovery as well. In fact, they've also stated that current 50 times its projected FY27 earnings looks a bit expensive when it comes to the stock. Of course, as I mentioned, valuations, growth, these are some of the factors that have led to, these concerns by brokerages. But in particular, Ambit prefers Nykaa as well as Sapphire among discretionary names. But Yatin, Titan, as I said, if you look at the 6-month chart, YTD chart, 3-month chart, you will see the stock has consistently been under pressure.
And I think, the major reason here is there was some bit of demand slowdown in the urban areas, number one. And number two, I think the kind of appreciation we have seen in the prices of gold, gold is almost, 85 to 90,000 rupees per 10 gram. That has also impacted the consumer sentiment. So to a certain extent, all of these factors, which is urban consumption slowdown with rising gold prices, probably have created some bit of headwinds for, Titan's growth, especially in the jewelry segment, which is a very large part of their business. That's
true, Yatin. And of course, they've also mentioned that, Tanishq, in terms of that end of the business, March and February, not expected to be that strong. So that would, of course, reflect in the numbers as well. But of course, gas stocks on fire today?
Gas stocks, not on fire. Probably fire is not good for gas stocks. But yes, gas stocks were doing well. 4 to 5% move in, the frontline gas stocks like GAIL. GSPL also did well, IGL, MGL, all of these stocks were doing well. So the entire value chain, be it the gas importers, the transmitters, or probably the end city gas distribution companies, have been doing well after PNGRB, which is the gas regulator, has come out with a consulting paper. Now, there have been indications by the regulator that they will cut down on the number of zones which are applicable to the city gas distribution and gas consumption. In fact, this could mean that the major pipeline tariff would be on the higher side. In fact, the tariff zone, if they are reduced from the current 3 to 2, it would mean a 20 to 30% increase in overall tariffs. Now, what does this mean? According to brokerages, GAIL will benefit as LNG cost can now be claimed. More importantly, the tariff hike also helps their transmission business. GSPL also, gains from the relaxed volume rules, and IGL, MGL would see lower cost, because once the entire value chain benefits, probably some cost benefits would get passed to city gas distribution players like IGL and MGL, according to brokerages. In fact, CLSA believes that the industrial users of Gujarat may face higher prices. However, on a pan-India basis, the things could normalize. Morgan Stanley says that GAIL, Oil India, Reliance and GSPL continue to be the big winner as far as this PNGRB paper is concerned on the gas companies and how really they look at increasing the gas penetration according to the new consultation paper. So let's see. The impact seems positive. Which of these steps gets implemented, because there will be a stakeholders consultation. If this goes through, probably there could be some positive earning impacts on the across gas stocks, be it GAIL, IGL, MGL, or GSPL.
It seems that right now the stocks have really factored in all the good news around these reforms that have been proposed. But a good thing for IGL, MGL, so to say, again the fact that those companies were really impacted when the government cut APM gas allocation, and then they did restore some of it, but not fully. And they were looking for alternate sources of gas, which would be a little cheaper, right? But now with costs going down, perhaps that would aid or act as a balm for earnings for some of these city gas distribution companies as well. So that was about gas stocks. We'll see how really this whole development carries through, how much of it gets implemented. But for now, we had a good rally on some of these stocks today. But the other stock that's in focus is DLF. The company did unveil its FY30 vision, and brokerages have also come out with their positive reports. Although some of the brokerages are little circumspect, but most of them are positive on the stock. Let's quickly take a look at what these visionary statements have been from the company at the analyst meet. They have unveiled, of course, key milestones that they aim to achieve by FY30. First of all, they aim to double their profit as well as cash flow by that time, and they are aiming to achieve the group net debt zero position as well, and they are aiming to achieve pre-sales of somewhere around 20,000 crores in FY26. They want to secure a gross margin of 45% in their development business, and they want to achieve surplus cash flow of 25,000 crore rupees from their launched projects as well, and they want to take the annual rental income to 10,000 crore rupees by FY30. And also another point that they mentioned was they would want to achieve a dividend payout ratio of 50% of PAT over time. Now, new launches worth 1,14,500 crore rupees are planned over the next 5 years, and near 35% of that pipeline has already been launched in the first 9 months of FY25. 15% of that launch pipeline is planned for FY26, and they've also laid out a capex plan of 26,000 crore rupees or thereabouts. Now, if you take a look or dissect some of these statements, Nomura believes that there has been no surprise, so to say, in the real estate company's commentary. They are neutral, target price of 700 rupees. They've said that the management has maintained FY26 pre-sales target of roughly 20,000 crore rupees or thereabouts, but the estimate was of somewhere around 23,000 crore rupees, and its FY25 pre-sales were at 20,000 crore rupees. So they are saying that the sales pre-sales guidance is conservative at best, and which is why investors may be a little disappointed. Now they've also said, acknowledged rather, that DLF has robust cash generation and strong annuity income profile, but they've also said that the current valuations price in all these long-term growth potential. Jefferies, on the other hand, they are actually quite positive on the stock because they have a target price of 1,000 rupees on the stock, which implies a near 44% kind of an upside from yesterday's close price. They've taken note of the fact that cash flows, profitability, these are all expected to double by FY30, even though the management remains cognizant of executional and cyclical demand challenges. Residential demand, according to Jefferies, appears healthy. 17,000 crore rupee residential launches planned for FY26, and stock trading at 30% NAV discount, looking attractive according to Jefferies. But of course, DLF is one player that has been seeing a lot of euphoria in terms of their bookings, etc., because they are launching another project mid 2025, right? They have already sold some 173 units at an average price of 70 crore rupee each. This is in Gurgaon, if I'm not mistaken. The Camellias, this was one that they had launched earlier, but right now Dahlias, that's the ultra luxury housing project in Gurgaon. So yes, there is no euphoria, brokerages have pointed out, but demand remains steady when it comes to luxury housing.
In fact, the company is also saying that moving forward, if they were to launch a limited number of projects, they would look at the luxury and ultra luxury segment. So which is a good part. They are not looking at the lower or the mid income kind of residential projects, and probably they are trying to brand themselves as one of the luxury real estate players in the city of NCR or Gurgaon, to be very particular. But yes, things have worked so far quite well in the last 2-3 years for real estate companies, and even if sales taper, probably the luxury market would take care of the headwinds in the real estate sector per se. if they were to, really slow down on volumes and focus on value.
That's true. So yes, that was about DLF. The stock was doing well. In fact, I think in tandem with all the other realty names, the stock had seen quite a bit of badgering. But last month or so, it has seen good 5% gains or thereabouts. But yes, that was all about the stocks that were on our radar this afternoon. I think there is a spring in the steps as we approach April. Let's hope this momentum continues. And as most market veterans have been pointing out that the correction we saw was a correction in a bull market, and wasn't really. And this rally isn't really a rally which is a part of a bear market. It's not a bear market rally. So yes, this rally has potential. A lot of experts we've spoken to on Money Control and Avaz and everywhere, they've all pointed out. And let's let's stay with that optimism, and let's hope that the rest of the week will also pan out to be as positive as it was today for the market as well. But with that, we've completely timed out in this edition of Closing Bell with from Yatin and me. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates.